It is hungry. Oh, it is so hungry. That public account, it wants $4 million so bad. It's getting there. It's getting there. Slowly but surely, baby. We're going to hit $4 million in that public account. So I'm recording this the second week of September. I have an incredible video for you guys here today. You know, whenever I get into the September, October timeframe, I'm already thinking about the next year. So I'm already thinking about 2026, how the market's going to transform next year, what the best opportunities are, hedges I need to make my portfolio, things like that. So I thought, since I'm already kind of thinking about 2026, let me do a video here today about 7 stocks that are a must buy before we get to 2026, okay? So that's what we're gonna get into here today and why these are incredible opportunities. I'm gonna share price targets with you, the bullish case, the bearish case, all that good stuff, okay? I hope you guys appreciate me sharing all this stuff with you guys. This was a beast of a video for me to put together here for today. Like, oh my gosh, okay? Listen, for everybody that's already smashed the like button, I appreciate you guys so much. Thank you for that. If there's anybody watching this that has not hit the like button on this video yet, please do that for me. That's all I ask in return for this beast of a video. This took hours and hours. I've been prepping this video for shortly after I woke up, I've been prepping this video, okay? Now I'm finally recording it for you guys. I hope you appreciate it. I appreciate you. All I need you to hit that like button, okay? Additionally, if you want to be subscribed to the channel, you can certainly subscribe. We're well over 880,000 subscribers. Appreciate each and every one of you for being here. If you need access to all my premium courses, access to my private Discord chat, exclusive weekly videos, 1000xstocks.com, all that stuff, that will be the pinned comment down there. You can click on that, fill out a form. Let's see if we can get you access in there. Additionally, in the description area down there, if you want to follow me on X, if you use X, or if you want to follow me on Instagram, those are always linked in the description area of my videos, okay? Alrighty, now that we took care of business, let's get into this. The first stock of these 7 stocks up here that is a must-buy before we get to 2026 is Celsius Holdings. Ticker symbol on this one is CELH. This is an energy drink company. It is a $55 stock as of right now. Now I'm doing tremendous on this position. Average cost in the public count is $24.39. We're already at $124,000 on the stock. It's been a tremendous performer for us. It's got a long way to go in regards to this. Whenever you see, a stock that has been performing great, sometimes people think like, oh, it can't do any better. Listen, man, like Celsius used to be a $5 stock. And that had been a big jump for it. Celsius used to be a $20 stock, and that was a big jump, right? Now it's a $55 stock. So, if Celsius goes where I think it's going, like we have a long, long way of upside from here. Now, you got to understand, this stock is actually still trading at a monumental discount from where the stock was trading at just last year. At its 2024 highs, this stock got close to $100 a share. Today it's 55. Now, I can make a very strong case for you that this company actually should be valued more where it used to be valued back then, because now we got rid of the bearish narratives around the stock and we have a whole lot of bullish catalysts going for us in the future here, okay? So, first off, we're already basically, PepsiCo made an investment in Celsius a few years ago. Then Celsius had these skyrocketing numbers because PepsiCo basically had distribution all over the place. Well, what happened was then PepsiCo had a little over ordering, and then additionally, Celsius had these ridiculous comps because PepsiCo basically got Celsius into just about every single store you could possibly want to be in the United States of America, right? PepsiCo has incredible reach, incredible distribution. So what happened is Celsius showed really kind of lame numbers when it comes to revenue for really like the past year. And it was because of that, essentially. You come off those brutal comps and over ordering, it's a double whammy. Now, that's over. That's no longer an issue moving forward, which is phenomenal news for 2026 numbers for Celsius and moving forward after that. Additionally, Celsius now owns Alani Beverage. This is a company they bought very recently here, and they just, acquired them like literally in the past few months. They now have them integrated into the company. Now, Alani, some of you guys might know this, it's been an energy drink brand that has been really, really popping off in, just across the United States of America recently, and so I'm sure a lot of folks know of this brand. Additionally, they just acquired Rockstar Energy. Now, Rockstar Energy, smaller player. From what I understand, it's about a 2% player in the United States of America. Used to actually be really popular, but what happened was PepsiCo bought out Rockstar basically at the beginning of 2020. And PepsiCo paid almost $4 billion for Rockstar. Now, Celsius is getting Rockstar for basically pennies on the dollar. This is like, they almost got to gift it to them. It's ridiculous. Like, they paid hardly, I mean, it's insane. Like, the deal that Celsius just did for to get Rockstar brand is unbelievable. And so hopefully Celsius can revive Rockstar. If they can't, it's not a game breaker, for Celsius in any way. It's just only upside, in regards to this Rockstar brand and what Celsius might be able to bring them back to. But basically, these PepsiCo, Coca-Cola, they've tried a lot of energy drink brands over time. They bought different energy drink brands and they all crashed and failed. Every single one of them. And so Coca-Cola realized, let's just make an investment in somebody. So what Coca-Cola did years ago, a lot of years ago, is they invested into Monster Energy. They own around 20%-ish of Monster. And PepsiCo realized, dude, we're a failure at this. Let's just acquire a part of Celsius. And so PepsiCo's now a big shareholder of Celsius, essentially, okay? Now, additionally, this was something that's massive, and I don't think people understand the ramifications of what this means for growth rates for Celsius moving forward in 2026 specifically. So listen. In that deal, basically, PepsiCo announced that they're now going to distribute Alani. Now, remember what happened with Celsius's numbers when PepsiCo did the distribution deal with them. They went through the roof. So what do you think is going to happen with the Alani numbers in 2026 as PepsiCo distributes those products all over the United States of America? My guess is, remember, Alani's already got incredible growth even without this PepsiCo deal. So now this is like putting a rocket booster behind Alani now at this point in time, right? So what you're going to see is Alani's growth rates skyrocket, Celsius's growth rate skyrocket simultaneously. This is a big, big deal, and that's in the United States and Canada. Now, additionally, if you look at how Alani was distributed prior, it looks like they were basically through a beer network, which is okay, but it's not ideal. It's not ideal, okay? And as somebody that used to work, for Walgreens back in the day and dealt with distribution companies, and as somebody that used to be a manager at QT, Quick Trip back in the day, you really want to have your distribution with Coca-Cola or Pepsi, okay? Just trust me. It's a much better situation, okay? Now, here's the revenue of Celsius, and this is what has transpired over time. Now, this was that come down of the Pepsi over ordering and the distribution, the tough comps and all that stuff, right? Okay, it was so depressing for like a few quarters there. This is where we're back to now at this point in time. And what you're going to see is revenue skyrocket for this company for quite a while. Now, in regards to the energy drink space, is a 3-horse race now at this point in time, a 3-horse race between Red Bull, Monster, in Celsius. Now, if you add up the Celsius market share with Alani, with Rockstar, you're at roughly around a 20% market share or so. And long-term, Celsius might be able to get this to like 25% or somewhere like that. Maybe best case scenario, like 30% market share, which would be incredible if they had that in North America, that sort of market share, right? Now, the thing you got to understand is Red Bull and Monster, right? I just thought Red Bull, it gives you wings. Here's the deal. And this is a problem for Red Bull and Monster. Actually have some pretty big problems going for them, okay? So toward the end of 2022, the co-founder of Red Bull passed away, all right? Now, in his place, they decided to do this weird thing where basically they're going to have 3 CEOs that are kind of on the board of directors to make big decisions, which is I don't know about this. I don't know about this, guys. That doesn't sound like it's going to be good long term. And so Red Bull, I would say, doesn't have the best leadership situation going for them anytime soon. Okay, and I think long term that's going to end up hurting Red Bull significantly. And Celsius has a lot to gain there. Now, additionally, in regards to Monster, there's basically co-CEOs that built this. Basically they acquired this company back in the 90s. And then they started the Monster Energy brand around 2002, and they made it double the size of a Red Bull. And the brand took off, to unbelievable heights. And 2 gentlemen led the company throughout this whole time, Rodney Sachs and Hilton. Well, basically, Rodney Sachs is stepping down from the company, but he is still going to be the chairman of the company. So these guys are kind of at the end of their run in regards to the Monster run, which is a historic beverage run they've been on, right? Now, Hilton's going to continue to run this company, but he's way out of his working prime now at this point in time. He's about 73 years old, from what we understand. Now, keep in mind, your prime as far as a CEO is about 45 to 65. That's the time period when you still have a lot of energy, right? You have experienced a lot in business. You know how to navigate, different situations. you understand this game on a high level. And so Hilton's now well out of his prime. I don't know how much longer he's even going to run Monster. And so somebody's going to have to take it over. Maybe Monster ends up getting sold to Coca-Cola over time. I don't know how they're going to end up. But the moral of the story is here, like the guys that built Red Bull, the guys that built Monster, like, you know, they're already left or they're on their way out essentially, right? Meanwhile, John, who's led Celsius over the past number of years, he's built this company into what they've become, right? And he's in the prime of his working career. If I recall, he's 44, 45 years old, like just right entering the prime of his career. And so we've got Red Bull and Monster who are going to be, in my opinion, on their back foot for the next 10 plus years. And we've got Celsius with a CEO that's going to be in his prime for the next 10 years. And so I think that is not the best thing if you're Red Bull or Monster, but I think this is very good news for Celsius at this point in time, because remember, Celsius needs to just keep grabbing market share, and market share. Now, when it comes to Celsius, here's the deal. Okay, listen. The whole market cap of the company is around $14 billion, all right? Which is a decent-sized drink company. It looks like it's around the 28th biggest market cap company. But where they're trying to get to is like a Monster-type company. Monster's over a $60 billion market cap. Now, keep in mind, Celsius and Alani, they have so much more of an opportunity. Like the rest of the 2020s is really just around getting those two brands around every place you can possibly imagine in North America, right? And then reviving the Rockstar brand. 2030 and past is going to be the international game. Just like for Monster, really, like a lot of their success over the last 10 years has come from international, right? They have a great core, like North American business, but then international's kind of been a great boost to Monster. And so Celsius still has that whole game to play out, folks. So it's going to be a fun next 5-10 years in regards to Celsius. So Celsius, I remain very, very bullish on this company. I think it's still very early days in the build out. I like the way everything's lining up here. I love John, the gentleman that's been leading this company for the last number of years. He's done an amazing job building this from just like a joke little micro cap company into like a serious contender in the drink space, right? Like, you know, we're going to be talking likely someday about this being like a top 10 biggest market cap company when it comes to drink space. At least that's in my opinion, right? Because a lot of these other companies are dead for growth. They're dead for growth, right? Alrighty, guys. Number 2 of these 7 stocks up here is, and there's a lot of similarities between this company I just went through and this next company. You know what it is? Elf Beauty. Ticker symbol on this one is ELF. $138 stock here today. Now, this is a stock, you know, it's performed unbelievable for me, up almost 1,800% in the public count. Cost base on this one, $728. Those were shares I acquired back in 2019. Now, you might just think I'm just sitting on these shares that I've had for like 100 years now. No. I've been buying this stock heavily this year across different portfolios. This is one of my bigger positions. I'll show you guys here. For example, this is 1,500 shares. My average price on this one is $59.13. So I've been buying ELF heavily this year. We're already up $118,000 on this. So it really shows my conviction of ELF from back in the day and ELF in current day, like as in 2025, right? Now, here's the deal. Okay, this is what I'm showing you right now is 1000xstocks.com. This is my premium software I use on a day in, day out basis, okay? And this is our charts feature. So we have a ton of different charts on there that can really give you an understanding of where the company's been, where the company's likely going, right? Now we can see when it comes to Celsius's earnings per share, it skyrocketed, and then we went through kind of a nasty down cycle, right? As the company just kind of focused on growth, acquisitions, road acquisition, which we'll get into in just a moment, all these sorts of things, right? So we're right here. This is where we're at right here. This is where the company's earnings per share is expected to go based upon analyst expectations here, right? We're about to get into an unbelievable revenue cycle that we'll speak more about in just a moment. But additionally, over this next 1 to 2 years, you're going to see the earnings per share of this company skyrocket as well, which is going to be a whole lot of fun. Now, here's a free cash flow of the company recently. Here's a trailing 12-month operating cash flow of the company. Imagine where free cash flow and operating cash flow are 2 years, 3 years out for this company. I mean, the numbers are going to be shocking in regards to this, right? Now, Elf Beauty, the cosmetics company, also has shareholder equity that has been skyrocketing over the years. Phenomenal. Additionally, what I'm showing you now is trailing 12-month revenue of Elf over time, right? It's a growth company. It's a major growth company. And they're about to put it with a turbo booster behind it. You know why? Because they acquired a company named Rhode Beauty. Rhode Beauty, which is a company started by Hailey Bieber. this company just got into Sephora. Now, Sephora, if you didn't know, Sephora is owned by Louis Vuitton, and it's a very popular cosmetic store. Rhode Beauty, for the most part, has only been a brand that really sold like direct to consumer. So the fact that now they're, going to scale this out into retail is going to be monumental for them. And I think it's genius that they're going into Sephora. And the reason being is this brand they don't want to be like super high end. They don't want to be like Estee Lauder. At least it doesn't come across that. They don't want to be an Estee Lauder or those sorts of price points, right? And super niche like a Louis Vuitton, because Louis Vuitton sells some makeup and beauty products as well. But they're not trying to go there. But they want to be like a higher end than, let's say, an Elf, which is a great opportunity for them. Right now, you go to their website, like they understand like marketing to the newer generation, whether it be, even the millennials, but especially like Gen Z, Gen Alpha, like they just get it. Like you just go to their website and you're like, they get it, man. They understand like what's cool, what's not cool, and all those sorts of things, which is big for them. Now, I was looking at some of their products they were highlighting on their page. It's a different price point than what Elf is used to. Like they got this peptide lip trio. Maybe I should use that. Three little tubes here, and it's $56. So that's different price points. Like Elf, a lot of Elf products are like, a lot of $10 and under products for Elf, right? Especially 15 and under. This, you get like this duo here of blush and lip combo, which is $45. So they're at a higher price point than Elf, which could actually help ASP's average selling price for Elf as a whole company in a monumental way. Now, this company is very successful on social media, which shouldn't come as a surprise with Hailey Bieber. And, obviously she's married to Justin Bieber and, networked with all the celebrities you want to be. They all those folks really understand social media on a very high level, right? And so they have 3.7 million followers on Instagram, for instance. Elf has 7.5 million. So considering how small Rhode is, that's amazing. And Elf understands, I think, social media better than probably any makeup brand out there in the world. It's incredible, right? Now, the bottom line is with Elf, growth is back. Baby, growth is back for Elf. And this is huge because you understand everybody and their grandma wants to be an Elf when they have the big growth numbers. And they're about to have the big growth numbers again. And so I think you're seeing a pile in regards to the stock. I mean, this stock was $49 just back in April. And it's already at 133. I don't think this pile up into the stock is going to end anytime soon. It won't end, in my opinion, until we see a peak in revenue growth. And I don't know when that peak in revenue growth is. My guess is it's probably 1 to 2 years away. 1 to 2 years we'll probably see. And when I say peak in revenue growth, I don't mean like, the company never grows after that. What I'm talking about is the revenue growth acceleration. Because what you're going to see is a massive acceleration cycle now for Elf and Rhode. So my guess is we probably see a peak at that at some point in the next 1 to 2 years. But between now and then, the stock's just going to continue to beast. People are going to be like, oh my gosh, they got the growth again. Like, you got to be in it. Because where else are you going to get that? In the makeup and beauty industry. If you want to invest in any sort of cosmetics related company, where are you going to get big growth? You got one option. It's Elf. That's your only option. Like, look at all the other cosmetics companies and look at there's no other option for you. There's one option, which means there's a pile in of the stock going to be for quite a while. And so the other thing with Elf, right, is this stock still trading at a big discount to where it was back in 24. I mean, this stock peaked well over $210 back in 24. It's $138 today. And so you're going to likely continue to see a pile up. And don't be surprised at all if this stock is $200 plus before you know it. So something to keep in mind there. Elf has a beautiful next 5-10 years ahead of that company. But, in terms of even the short term, as in the next 1 to 2 years, oh my gosh, phenomenal. Okay. Alrighty, guys. Next up here, number 3 of these 7 stocks is Google McDougal. $234 stock here today. It is easy money. It's been easy money. This stock I bought in the public count back April 23rd, 2025. Already up almost 50% on that position. Easy money. Google is easy money. I've been saying it for a while. It remains easy money, right? Look at Google. I mean, it's incredible. 3 billion users on Android, 3.3 billion on Chrome, 1.8 billion on Gmail, Google Drive 1 billion, Maps 1 billion, Photos 1 billion, Play Store 2.5 billion, Search 3.6 billion, YouTube has 2 billion plus users. I'm surprised it doesn't have over 3 billion users when it comes to YouTube, by the way. It's a deep company. It's a very deep company and one of the leading companies, in my opinion, in the artificial intelligence space as well. And this is a type of company like it's safe. Like you think about like how diversified the business model is. It's a pretty dang safe business model, especially now that the government's not going to tear them apart. There was worries that, the government might tear them apart. That's out the window now at this point in time. Look at the income statement of this company. Does this look like a company is doomed and they're screwed? I don't think so. $96 billion. This is their latest quarter they just reported. $96 billion plus of revenue versus $84 billion in the same quarter last year. If we look at income from operations, it went to over $31 billion from 27.4 in the same quarter last year. Net income, $28 billion from $23 billion in the same quarter last year. Grade A income statement for Google McDougal. By the way, if you don't understand how to grade income statements, balance sheets, cash flows, that's like very core to what you need to understand the market. Check out my private group. Well, I got the course curriculums. I can teach you how to do all this stuff so you're not lost. Because if you don't know how to grade an income statement or a balance sheet or cash flow, so good luck. Good luck in the market long term, right? Now, this is our charts feature here on 1000xstocks.com. Look at that perfection. That is what you want to see. When you pull up a trailing 12-month chart of a revenue of a company, that's the beauty you want to see right there. I mean, it's just perfection. This is where we're at right now. This is where we're expected to go. It doesn't get better than that, man. When you just want up and to the right, and that's exactly what Google gives you, up and to the right. Additionally, obviously the margins are great for Google. That shouldn't come as a surprise to anybody. Look at the earnings per share. This is where we're at right now. This is where we're at, right? Look at the trend. Look at where we're expected to go. I mean, is beautiful, okay? Look at the operating income of Google McDougal and where this is trending. This is where we're at right now on a trailing 12-month basis. Lovely. Top 5 balance sheet in the world. Look at the shareholder equity. Just continues to boom for the company. I mean, when you talk about a really safe company, you got to have a company that, can't just be disrupted easily. And you got to have a company that has an amazing balance sheet and a strong moat around the business. And gosh, that is Google McDougal, right? Now, additionally, shares outstanding. This is one of the most, I think, overlooked things when it comes to Google. You've got a lot of things to be bullish on with Google, but I think this is so overlooked. And I think investors really need to start paying attention to this. Shares outstanding has been going down, 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 down for the company. Listen, what happens with Google's profits? What do we see with Google's profits? They continue to go up, 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 up significantly. What do you think they're going to continue to do with those profits? They'll obviously spend on the AI future and other options. We know that. They have a small dividend. They might up that time to time. We know that. Okay, what do you do with the rest of the money? Because there's so much money pouring into Google. Like this company, just in its latest quarter, which that wasn't even that wasn't even the best quarter for them. Like best quarters are always, that Christmas quarter because of the advertising side of the business. So they just did $31 billion in net income in a 3-month span. They're doing over $10 billion a quarter in net income. They have so much money, they don't even know what to do with it. So you know what you don't know? When you don't know what to do with it, you know what you do with it? You do share buybacks, which helps earnings per share immensely because the company's net income just keeps going up and up and up. Then you keep bringing shares down, earnings per share skyrockets. And that's why Google can honestly get a 20%-ish EPS growth for a long, long time to go in the future, right? Now, let me take you into my projections on where Google stock is headed from here. I'm going to take you into my bull case, base case, and bear case for this company, okay? On 1000xstocks.com, we have a projections feature. This is one of the most important things you can ever do with the company. If you are not using projections when you're running your company's numbers, you're not playing this game right. You have to run projections for where you see a company's revenue going, net income going, and where you think fair P ratios are. You have to do this, guys. Okay? If you don't have access to 1000xstocks.com, build your own spreadsheet out. It's going to be a pain in the butt because we automatically populate what the numbers are expected for this year and all those sorts of things, and the calculations are already done for you. So this will save you a ton of time, and it saves me so much time. But back in the day, before 1000xstocks.com existed, I used to have a spreadsheet, and I'd run my numbers that way. You've got to be able to do this, guys, or you're going to end up in a lot of problems in the stock market, okay? But basically, we just launched this new feature a couple weeks ago where you can actually save company projections. So I have a few companies saved at my Adobe projections, Amazon, Apple, so far, Duolingo, Google, LVMH, Palantir, Salesforce, and I believe I just saved up AMD as well. So I go ahead and click on my Google. That pulls up my projections from a couple weeks ago I did on Google. So my bull case for Google, I have them doing 12% revenue growth on average per year, 2026 to 2029. Does that sound crazy? I don't think so. I've been doing 15% net income growth. Does that sound crazy? I don't think so. No. P ratio. A 12% grower on top line, 15% on bottom line, 25 to 30 P is pretty fair, right? So in that situation, Google stock should be somewhere between about $443. This is in 2029. Somewhere between $443 and $532. Give me a compound annual growth rate. We can call it somewhere around 20% in the bull case. Not bad, especially for a company as safe as Google, right? Incredible. Base case. So base case is just a fancy way of saying this is what I expect. Now, I'm always a little conservative in regards to my base case, but this is what I expect for Google over the next number of years, okay? Now, revenue growth, 10% per year on average for those years, and then doing 12% on average net income growth. A 23 to 28 P is pretty fair for this company. That gives me a compound annual growth rate on the low end of 12%, on the high end 18%. That's a pretty good return on my money. I will take that, especially for a safe company like Google. My bear case for Google, this would be a disaster. This would mean they really actually got disrupted by AI. Only 7% revenue growth. Oh my gosh. Only 8% net income growth and a 2025 P. Guess what happens? I still make money. A disaster for Google comes. And guess what happens? I still make money. I would still get a compound annual growth rate on the low end of about 4%, on the high end 10%. Give me Google stock. Give me Google stock. And this is why you've seen me continuously buy Google stock almost nonstop in the Patreon portfolio recently. Because I'm like, if I can run a bear case and still get a very positive outcome, thank you. I'll gladly take that every single time. Okay. So Google McDougal is number 3 of 7. Number 4 of these 7 stocks up here is, that you got to buy before 2026, is ADBE, Adobe. I got a relatively new position in Adobe in the public count. I got 330 shares. So far, I'm up $2,000. It's basically this is roughly flat. Okay, I'm up 2%. That's like nothing, right? Now, if I recall, Adobe was one of the stocks I spoke about in 4 stocks I'm buying September 2025 edition. I believe it was either one of the stocks featured or was an honorable mention in that particular video. And I've been talking about Adobe quite a bit recently on the channel, right? Now, when it comes to Adobe, here's kind of my different cases for Adobe. Here's my bull case. My bull case, listen to this, guys. My bull case, my bull case has them only doing 10% revenue growth per year. 2026 to 2029, 10% revenue growth. That's my bull case. I've been doing 12% net income growth, only 12% per year, and that's my bull case. No, for a SaaS-ish related company that has recurring revenue streams, 25 to 30 P is pretty fair. In that bullish scenario, it gives me a compound annual growth rate of 20% on the low end and 25% on the high end. My base case for Adobe. What a depressing base case. What a depressing base case I have. 8% revenue growth on average per year, 2026 to 2029. 10% net income growth on average per year, right? 23 to 28 P ratio. Such a depressing bear case. Base case, excuse me. This isn't bear case, this is base case. And I still get a compounding annual growth rate of 15% on the low end, 21% on the high end, with 8% revenue growth per year. Free money. It's free money. Come on, man. Now, here's my bear case for Adobe. Bear case for Adobe would be 2% revenue growth, 2% net income growth. That's so ridiculously bearish, I don't even know what to say. 15 P ratio. Basically, the stock would give me a negative return, right? But that's just ridiculous. Okay, Adobe's going to grow only 2% on the top line, bottom line. The moral of the story is here in regards to Adobe. Yeah, it's not the most exciting stock in the world, But if I'm going to run a boring, sleepy, put me to sleep base case like this, and I can still get a compounded annual growth rate of 15% to 21%, dude, I got to take the money. It's free money. Like, okay, give me the free money. It's a money tree. Like, come on, man. Like, and we are not even accounting for all the shares they're going to buy back over the next number of years. It could give a compounded annual growth rate of 20% plus. Keep that in mind. Stock number 5 of these 7 stocks up here. Oh, is this one hated? Ooh, it's a hated stock. But my gosh, the return is going to be beautiful. And you know what it is? Nike. N-K-E. Nike. So this is one I now own 2,777 shares. Me and Phil Knight, we pretty much control the company at this point in time, okay? And this is just in the public account alone. I've been buying this stock in other portfolios. I'm down 4% on it. I think I'm going to make a lot of money in Nike over the coming years. And I think this is a stock I can hold for years, if not decades, to go in the future. You know, I was watching some football this weekend, like I'm sure a lot of people are watching football, right? Nike commercial came on, got chills from that baby. It's not the first time. I'm just like, man, woo! They know how to, they understand marketing, advertising, branding at a higher level than any other company in history. It's unbelievable what they're able to pull off. I mean, I watch other shoe companies' commercials and it put me to sleep, and then a Nike commercial comes on, you just get chills. It's unbelievable what this company does. No, I spoke about Nike quite a bit on the channel recently, but I recorded a video for my private stock group members, was that a couple days ago or so, right? And I said, what can we learn from Buffett and his biggest stocks? And basically what I did in that video for the private stock group members, I looked over Warren Buffett's biggest positions. And then I said, what can we derive from like Buffett's magic in regards to, how he's been able to grow wealth over time, right? And we came up with basically what I was able to come up with is when it comes down to his biggest positions, he really makes sure they have incredible moats around them. And they're near impossible to really penetrate. And like the companies are almost have like a monopoly type competitive positioning that you just can't end up competing with them. And what you realize when you go down the Nike rabbit hole is Nike has no competition. Now, if you haven't gone down the rabbit hole, that sounds ridiculous. Like, what? Nike has no competition? I mean, there's Adidas, there's Hoka, and there's On, and there's what are the other brands that are hot at the moment, right? I think Lululemon sells shoes right now. I don't know how hot they are. I mean, there's so many companies who say, oh, what the heck? How does Nike have no competition? Everybody sells shoes, right? Plenty of companies sell athletic clothes. I can tell you, Nike has no competition. They have no competition. The reason they have no competition is because no one can invest in the brand the way Nike does. What happens is they go through, other brands come out, they go through a hot spell, they decide to reap maximum profits from that, they don't invest in their brand, and they falter. I can take you through the 1980s, the 1990s, the 2000s, the 2010s, and now I can take you through the next generation. It never fails. It never fails. These companies will they're a Nike competitor and they're hot for a few years. They make maximum margin on that. They don't invest in their brand and they falter every time. The closest thing I saw to a real competitor to Nike, the closest thing was Under Armour back in the day. Under Armour was the closest thing. Kevin Plank, he really was investing in his brand at Under Armour quite a bit. And he really spent on it. And that was the closest thing I've ever seen to Nike. And you know what happened to them? They failed. I think Under Armour stock today is like a $5 stock or $7. They're like they've been in a gulag on and off. Like it's just they exist. They're still a company, but it's just like, they never became Nike. No one ever becomes Nike. But they were the closest thing. In the last 40 plus years, Under Armour was the closest thing to actually pulling it off. And they still couldn't do it. And so you just got to understand there's no actual competition for Nike. There's only two ways Nike can be hurt, essentially. One is the consumer. When the consumer's in a bad spot, they've been sliced and diced by inflation. That means they have less money to go spend on a new pair of Jordans or, a new pair of shorts or whatever it is, right? A new shirt. So no doubt when the consumer's hurt, Nike can get hurt because Nike sells to everybody. It doesn't matter if you're rich, you're poor, you're middle class, Nike sells to you. The only other thing that can really hurt Nike is themselves. And that's exactly, basically what happened was a guy that was from consulting world, they brought him in to run the company over Elliott Hill. Elliott Hill decided to leave the company. It was a huge mistake. He made a ton of bad moves for Nike. He screwed up. And now Elliott Hill got brought back in last year, and he's running the show again, and he's doing it on a very high level, and he's bringing Nike back to its glory days. And you'll see that continue to play out over the next several years. And so, you got to understand they had basically a double combo. That's why Nike stock is so discounted right now. The consumer got sliced and diced by inflation, and they hurt themselves because that consulting CEO screwed up in so many ways. And but it's all a thing of the past now. Like, it's all a thing of the past, right? The super high inflation, it's a thing of the past now. That consulting CEO, was it named John Donahoe or whatever his name is, joke. Made so many bad decisions, are ridiculous, and that's a thing of the past. And so, you just got to understand that. Now, here's the deal with Nike. If you're not buying it right now during a time like this, you will never own Nike. You'll never own the stock. Because this rarely ever happens that you get the stock trading at multi-year discounts like this. This is the time to be buying a stock like Nike. If you believe in Nike over the next 10, 20 years, you got to buy during a time period like this. If you don't buy now, you will never buy this stock. You got to understand, this company only goes through bad times every so often. So back in 1983, the stock fell 34%. 1984, the stock fell 47%. Massive crash in Nike stock. Imagine if you bought back then, you would be a billionaire probably, or like just ridiculously rich. Okay, let's just call it that. You're rich enough to like have your own yacht. Let's just call it that. Okay, 1986, the stock fell 14.5%. 1993, the stock got absolutely decimated, lost nearly half of its value that particular year in 1993. 1997, the stock got hammered 34%. In looks like 2002, stock fell 21.5%. 2005, the stock fell 3.6%. 2008, the stock fell over 18%. By the way, this wasn't even to the lows. This is just where the stock started the year versus finished the year. So keep in mind, these numbers were all much worse if you look at intra-year. 16% fall for the stock in 2016. You can take advantage of a time period like this with a stock like Nike, add to that stock, throw it in the filing cabinet, hold it for the next 10, 20 years, or you don't. It's one you either get or you don't get. And I think I get it. And I think we're going to make a whole lot of money in the stock over the next number of years. And then it's going to be such an easy stock for me to hold. As long as whenever Elliott Hill is done with the run he's going to go on, my guess is Elliott Hill will probably run this company for the next 3 to 7 years. Whoever he hands it off to, it just needs to be somebody that's from Nike's culture and understands the company on a high level. They cannot bring in some consulting guy again whenever that time comes. But that's still several years away. My guess is Elliott Hill really wants to make sure this ship is all in the right direction. Revenues, margins, EPS is going up year after year after year before he says peace out once and for all and like goes into true retirement. Okay. Stock number 5 of these 7 stocks is number 6 of 7. Sorry, 6 of 7 is CRM, Salesforce, $252 stock. Here today. So Salesforce, this is a new position for me in the public count. So far, I'm up about 3.7% on it. 243 is my cost base on this, relatively new. I just started adding this one September 4th, 2025. The thing with Salesforce is this stock's been dead for 5 years. Dead for 5 years. Now, there's 2 reasons the stock's been dead money for 5 years. One is it was overvalued. 2, people have given up on Salesforce. Now, when you look at the numbers, you say, what are they giving up on? These numbers look great. But it's what has happened, essentially, okay? Now, I posted this inside the private stock group, okay? Basically, Salesforce, keep in mind, Salesforce is going to do well over $40 billion of revenue this year, okay? Well over $40 billion. They have this data cloud and artificial intelligence side of their business, which is growing rapidly, 120% growth on a year-over-year basis, right? They're up to doing over $1.2 billion on basically annual recurring revenue. But it's a really small absolute number when you compare it to a business that's going to do, probably between $41 and $42 billion. So although this side of the business is growing rapidly, in Agentforce, which they just launched in the past year, essentially, Agentforce has been taking off, and this is an incredible opportunity. It's definitely worth diving into and getting educated on what they're up to with Agentforce and why it matters for mid-sized and large companies, essentially, right? But this business is growing rapidly, and so you got to understand this company is really going to start to be very positively affected by all this growth here in 27 and 28 because that's when these numbers are going to be huge on an absolute basis. And that's when it's really going to start to increase the revenue growth rapidly with this company. Now, additionally, they should have the Informatica deal that should go through. It's about an $8 billion acquisition. That deal should go through in 2026. So the revenue is already going to get boosted up significantly in 2026, slightly because of this, even though it's still going to be a small absolute number, but really because of that Informatica deal. And then obviously there's a revenue growth that goes on at Salesforce in general, right? So the growth rates for Salesforce, I think in 26 are going to be an acceleration over 25, right? Then we're going to see another acceleration in 27. I think we'll see another acceleration in 2028. The one wild card is if we have some monumental recession in the next, 2 or 3 years, that could throw things off. But that could be said for any company. But as long as the economy is okay or good, you're going to see revenue growth acceleration in 26, revenue growth acceleration again in 27, and then revenue growth acceleration again, in my opinion, in 28, which is going to be very exciting times for Salesforce, okay? No, I don't think my bullish case for Salesforce is bullish enough. I think I got to up these numbers. I think I'm going to redo my projections tonight because I think my bull case should be even more bull than this. I've been doing 12% revenue growth on average per year, 2026 to 2029. Now, remember, the Informatica deal should go through next year. That's going to be a huge boost to revenue. Then they're going to likely integrate that, start selling that even more rapidly, right? Probably go up on pricing. And then the absolute numbers on their AI side of the business and data cloud is going to really start to matter as the years go on. So I think 12% revenue growth is too low for a bull case on Salesforce. I'm going to probably bump it up to 14 or 15%. So just understand what you're seeing right now is actually not bullish enough. Net income growth, I think 20% is very fair for Salesforce going in future years. 27 to 32 PE ratio, so that gives me a compound annual growth rate on the low end about 16%, high end about 21%. My base case, I also want to take my base case revenue up to probably where my bull case was at. But this is my previous base case, 10% revenue growth per year, 26 through 29, 18% net income growth, right? 25 to 30 PE. That gives me a compound annual growth rate of 12% low end, 17% on the high end. And then my bear case has 6% revenue growth on average. Complete dumpster fire disaster for Salesforce. This is like they got disrupted by AI or something. 10% net income growth. That gives me compound annual growth rate of 1% on the low end and 6% on the high end, right? For Salesforce. Now, additionally, you got to always think about who's the big dog leading the company. We spoke about some of them already in this video. You got Benioff leading this company. The man is an absolute goat salesman. An absolute goat salesman. He is incredible. The job he has done leading this company over time, just a 101. Either he grew Salesforce from nothing into, I would say arguably or probably definitely the most important SaaS company in the world, the most important, customer relationship management company in the world. It's incredible what he's done. And so, you just don't bet against Benioff. Don't bet against Benioff. Anybody that's done that, the man's got stories on stories he can tell you about, back when he was friends with Steve Jobs and he worked for Steve Jobs. He can tell you stories about when he worked for Larry Ellison and advice he got back in the day. And he's full of all types of great stories as well. No, I am a Palantir shareholder. I've been able to take ridiculous profits in Palantir this year, right? Incredible gains. And I'm still sitting on incredible gains, but I only own 1,000 shares. And the reason being is Palantir should not be valued more than Salesforce. It shouldn't even be remotely close. I'm not even convinced Palantir ever is going to get to a revenue number that Salesforce has. So the fact that the company's valued larger than Salesforce shows, one, Palantir is significantly overvalued. Doesn't mean it can't get more overvalued, right? And two, it shows like Salesforce is incredibly undervalued right now. So just something to keep in mind there. And all that will be proven out. I know Palantir inside and out. I know Salesforce inside and out. Trust me. Palantir's valuation likely peaks in 25 and then starts to go down and goes through a really tough time. That's why I've sold the far majority of my shares. And when I say a tough time, it's going to go through a tough time for years. And Salesforce is just going to continue to get larger and larger. And we'll see Salesforce eventually likely get to a $500 billion market cap. In long term, they have the potential to become a $1 trillion company. When I say long term, if we're talking like 10 years out, they could get to a $1 trillion market cap over time. Okay. So Palantir, I'm not sure they're ever get to a $1 trillion market cap, just to be quite frank. Alrighty, number 7 of these 7 stocks up here is AMD, Advanced Micro Devices. There's a stock that I've been buying very heavily. I would say probably, when did I start buying this one? I think it was the end, maybe it was the beginning of this year, the end of last year. and just kept acquiring shares and acquiring shares. Now we're up over $101,000 in the stock. Cost base on this one, 111.61, 2,555 shares in the public count. What an incredible opportunity of an investment this is, okay? Now, this is my bull case for AMD. 30% revenue growth per year. Based upon the 350 chips that are really going to be meaningful for 27 and the 400 series, which is going to really matter for 27, 28, I mean, I think 30% is actually pretty doable under a bull case scenario, right? 40% net income growth, you know, if they're doing 30% top line, 40% bottom line, even for a semiconductor company, which usually don't get the biggest, you know, PEs, I think a 40 to 60 P is fair for a bull case like this. It gives you a compound annual growth rate on the low end, 37%, and on the high end, 51%. But what do I actually expect? My base case is always what I actually expect with slightly conservative view. So my base case for AMD has them growing 25% on average per year. Now, keep in mind, I think the revenue growth in 26 will be way above 25%. 27 is going to be way above 25%. So just keep that in mind. And then maybe a slowdown in 28, 29 when it comes to revenue growth. But the average will be 25% in my opinion. 35% net income growth on average per year is very doable for AMD over the next number of years. 35 to 40 P would be pretty fair for a company growing at these sorts of growth rates. 27% compound. Remember, this is my base case. In my base case, 27% compound annual growth rate on the low end, 32% on the high end. I've got to take that. I've got to take that. So if you wonder, like, wow, I'm already up $100,000 plus on AMD. Why am I not taking any profits? Because the stock's likely headed to 400 plus. So I'm in no rush to take any profits on AMD. Under my bear case, this would be a disaster for AMD. 15% revenue growth, 20% net income growth on average. I mean, this would be embarrassing. Like Lisa Su would forever be embarrassed for this. 20 to 25 PE, basically that gives me a negative 1% return over time to maybe 4% compound annual growth rate, right? That would be really bad. No, Lisa Su, here's the deal. She's had her back up against the wall many times. She's led this company since it was like a $2 Chuck stock. And shortly after she took it over, I remember the stock was like $1.91, $1.70 something. And she's made it into one of the most important companies in the entire world now at this point in time. And so, clap it up for her. And I feel very comfortable with somebody like Lisa Su leading the company. And she seems like she's head down, like as focused as she's ever been. And so, people like Benioff, people like Lisa Su, like, man, these are legends in the business space. And I'm more than happy to have them leading the companies I invest into. Okay. I appreciate everybody joining me as always. Thanks so much for being here. This was a beast of a video, 47-minute video. Oh my gosh. I hope you guys appreciate this one here today. If you're looking to apply to our private stock group, you want my entire library of premium courses. You want access to my private Discord chat, exclusive weekly videos, see what stocks I'm buying and selling each week, pin comment down there, click on that, fill out a form, see if we can get you access and there. Let's get you up to a much higher level than where you're at right now. Much love and have a great day.